Hello, this is Erin Swenlin from DecisionPoint.com, and I'm coming to you for your daily five. These are five of the charts that I'm going to be watching very closely going into the next week, and I think you might want to as well. So let's go ahead and just get right into it. All right, before I go through those charts, though, I want to let everybody know that I do hold a live trading room. It is free. I do it on Mondays from noon Eastern to 1 Eastern. You can register just by going to the decisionpoint.com website, and you'll see the link for registering for the trading room right there, or I would love for you to sign up for our free newsletter. All right, well, let's start with the SPY because, of course, we need to know what's going on in the market. And this is the chart that I watch during the week. I write about this chart every day in the Decision Point Alert, and it's been quite interesting, I would say. We have had this rising trend channel going on for quite some time. It's been working out very well. We did dip below that, but we did hold the 50-day EMA. And we were seeing a possible exhaustion lining up here at this low that we talked about. And of course, since then, we've had an almost straight up rally here to the top of that rising trend channel. When you start to break above these channels, you're really overbought. We already know we're overbought in the market. Let's face it, the valuations are extraordinarily high. It's very speculative right now with everybody getting involved with the apps, etc. We've seen what happened with GameStop and all of that. But if we watch and see price get outside of this rising trend here, this trend channel, I would be very concerned about a more serious decline ahead. Right now we're holding that rising trend, but we're now really being squished, if you will, between that rising trend and the top of that trend channel. Now, a lot of good things are going on under the surface, so it is hard to be extraordinarily bearish right now, except for the fact that we do know we're hitting some resistance here, and we are also trying to maintain a rising trend that's going to be very difficult. But we do have a new PMO buy signal that did not come in last week. It's coming in right now this morning on Monday. And we already were seeing buy signals coming in on the NASDAQ 100 and on the S&P 100. So I'm not totally surprised to see a buy signal here. My concern right now is that it's just coming in too late. You can see that the volume on the SPY had been trickling lower, but even total volume had moved below its annual average. And there we were making new all-time highs. So that gave me a little bit of concern. This is a bit of a problem that I'm seeing now this morning, and that is the VIX kind of starting to turn over here. We invert our VIX so that we get overbought conditions on the top and oversold conditions on the bottom. And seeing it tip over even before hitting the upper Bollinger Band, which of course we can't even see right now, that turn is not something I want to see because typically those turns lead into declines. Now, let's face it, they haven't all been that difficult. You can see over here, we had a little bit of a pullback, but we also know that it can be difficult and it can be a bit more, well, we should be ready for a bit of a downturn here. I know I've been telling my Decision Point Diamonds subscribers to tread carefully and load those watch lists. Right now, I think we're going to be climbing the wall of worry, as they say. So we should still take advantage of what momentum we have currently. But the Swenlin trading oscillators are telling me there could be some issues here. Yes, they look strong. They're rising strongly. But now, as you can see, Friday, they really reached some overbought conditions. Now, we've seen higher. We've seen more extreme readings. But the fact that we're up there should give us some pause and the market likely a pause, if nothing else. But it should really keep us in line here with the market, knowing that we might start to see a downturn here with these overbought conditions. The negative divergences are still in play. Now, normally, of course, you want to wait for that second top to come in to give you your negative divergence. But we have been marking a negative divergence, even though we don't have that second top, simply because we're making new all-time highs. And so in terms of making new all-time highs with your price, you certainly want to see the same thing happening with your indicators. And currently, we're not really seeing that. And so we need to be, again, caution, err on the side of caution. Let's go ahead and jump into gold. It wouldn't be a decision point discussion if we weren't covering the metal. So I'm going to go ahead and show you what we're following. Now, obviously, it's just been a pretty, boring time, if you will. We've just been in kind of a large trading channel for gold. This is GLD. And we, in the short term, got really into a very short term trading channel where we were testing, top, bottom. And then we broke way down. I had to circle this candlestick for my readers because I wanted to make sure that they could see it on the chart when we had that big decline. The indicators were very negative, but I did state at that time that we're looking at very oversold conditions now for gold, and that we certainly could be at a reversal point. I was expecting it to test this low back here in November, but honestly, the fact that we did not have to go down and test that low and then started turning up, I think is really good for gold. And the PMO, our momentum oscillator, is turning up now for gold, and we're starting to see a little bit more discount activity. We measure the discount on the closed-end fund of the Sprott Physical Gold Trust. So depending on what people are paying for that, for PHYS, PHYS, we determine whether there's a discount or a premium based on the actual cost of gold at the time. And as you can see, discounts have been prevailing at this point. Discounts mean that people are quite bearish. And we want to see that bearish activity start to peak, get very high as far as the numbers go. And that usually is when we're going to see that turn. Now, we took a little while to get a turn here, and we can see there is still some bearish sentiment out there, but it's not extreme. So in all honesty, seeing investors still rather bearish, especially after this nice move to the upside, I think that gold still has some work to do. But this is certainly encouraging. The fact that we've moved right back up into that trading channel there, I think, is positive. Of course, the next level support we're going to have to, or overhead resistance to deal with right here, is that 20-day EMA. So we'll be watching that closely. At this point, with this strong push to the upside, the RSI moving upward, the PMO finally turning upward, I think that we're at least good to get to the top of this trading range. Past that, I really will want to see what's going on with the PMO, with the RSI. But for now, it really looks positive enough that we will get up here and test the top of that trend channel on GLD at about $176. That's my expectation right now. If you read my Chart Watchers article in the Chart Watchers blog or saw it on the email that went out, I wrote about technology and I wrote about materials. Materials, I started to see some really nice activity going on under the surface. And I think that with the market looking soft, possibly turning down, I know it's hard to talk about the market being soft when we're hitting all-time highs, but we're hitting that area of overhead resistance. It's getting harder and harder to make those new all-time highs, or it will. And one of the places that I think we're going to start finding some really great bargains right now, as the market does look as if it will turn here very soon, is materials. Technology still looks pretty good, but there are negative divergences going on there. Again, you can read my article. And I think that technology looks like it might be ready for a turn to the downside, whereas materials, I think, is starting to look like a Cinderella story, if you will. We can see that, and I noticed this in our trading room last week. So anybody who had been in the diamond mine last Friday, or I think even last Monday, I was talking about some of the material stocks that were interesting. And you can see this is the actual sector chart for XLB with the price and of course RSI at the top. Now we do a bunch of other indicators underneath, and they really can give you a great feel for what is going on under the surface in these sectors by measuring what's going on with the components in the sector. So we have the regular momentum on the price, we have the OBV to give us some ideas of what's going on with volume. And then we've added these other indicators to give you a feel for what's going on with the members of that sector. And so the Silver Cross Index, we measure how many of the members of XLB in this case have their 20-day EMA above their 50-day EMA. And that tells you, of course, that they're in an intermediate term bull market, if you will, or looking bullish. So we're seeing an improvement on that. We're seeing the BPI starting to move and bottom and possibly turn up right now in oversold territory. And then looking at breadth here, we can see how many stocks have their price above the 2050 EMAs. And this again gives you short-term and intermediate term participation. And as you can see, more and more of these components are finding price above their 20s and their 50-day EMAs, yet they're not overbought. So we're seeing this move into the improvement of the stocks within XLB. The Golden Cross is very overbought. I'm just going to say that right off the bat. But what it measures is how many of the components have their 50-day EMA above their 200-day EMA. And that tells you that there is a bullish bias on the chart for a component that has its 50 above the 200. And 96% right now of the material stocks have their 50 above their 200. So this is an overbought reading, but as you can see, overbought readings on this particular indicator can persist. And it tells us that there's a lot of strength under the surface. If you've got the majority of the material stocks having their 50-day EMA above their 200. So I think materials are really starting to shape up this week. I would be watching those closely. You can see the RSI getting positive. And again, all of these indicators are beginning to turn back up. And the others are showing that we're getting participation under the surface. So that leads me into my diamond of the week. And this actually happens to be a favorite of one of my subscribers. So it ends up on my radar quite a bit. And with materials starting to shine, I wanted to find a pretty good stock within that area that I'm looking at. Because within the materials sector, my concentration, I would say going into the week industry group wise, would not be necessarily gold or gold miners. That actually would probably be my last choice. But the two that I recommended that my subscribers look at going into the week was steel and aluminum. Both of those particular industry groups, if you look at their charts, just the industry group charts, you'll see that there's a vast improvement on them, but they're not overbought yet. This one is having a particularly great day. And I don't like to present things that are, too far, have run their course or really have made the most of their rallies. This one, I believe, is on the beginning of that rally. You've got momentum that is just now beginning to turn up. You've got an RSI that is just now moving positive. And then look at this flag on a nice tall flagpole and the really clear breakout here from that declining trend channel. We've now got price not only above the 20-day EMA and above the 5-day EMA, we have plenty of room to test, to get up here to challenge the overhead resistance at the January top. And with things looking so good under the surface for the material stocks, particularly in aluminum and steel, I would expect to see that $19 area challenged. And that is all I have for you for the Daily 5. I want to thank you for watching, and do go to the decisionpoint.com website, sign up for our free newsletter, sign up to come into the free trading room. I'm getting ready to go in it now and record it. So it's a lot of fun, and I'll get to your symbols, etc. For now, happy trading, and we'll see you next time.